Yeah. Oh, we are back. This one here is Market Forensics, episode 3, brought to you by Ask Bid. You're unsure, just ask. And you know who I am. It's Bid Guy, Mr. Wall Street, Don Wick in this bitch. Yeah, put the kids away. All right, we're going to go into the dark side of the market. All right, I want to talk about prop firms. All right. Think about this, right? You ever notice how these prop firms started multiplying out of nowhere like off-brand Jordans in your feet? Yeah, you're seeing them everywhere, just popping up left and right. I mean, coming from my day, I actually got my start with these prop firms. Got my feet wet with the prop firms. And this is when there actually were legitimate prop firms that were not predatory, weren't out taking advantage of retail traders who are uneducated or uninformed on how to actually vet, your prop firm. And I don't know if you're dealing with somebody who is really out for your best interest or you're just in a hamster wheel. Okay, so for me, um, I understand that there is a time and a place for prop firms, but I also understand that if you're not with a reputable firm that has a history of payouts, good reviews, and rules that are realistic, you're caught in a hamster wheel, right? But now suddenly everybody is funding traders. Everybody's got a funded trading account. And you're seeing they're funding everybody but you. You know why? It's because they're funneling you, they're farming you. Okay? There really is no real objective or end goal for them to fund you. We're talking about the predatory prop shops. They're really farming you. They're really looking at your stats, your statistics, and looking at your expectancy to reset, if you will, because they're making money off those fees. Folks, this ain't a challenge, it's the hamster wheel. And you're the hamster in the wheel, getting high off the dopamine lace mazes that are laced with booby traps. Yeah, yeah, they make it bright and real shiny, but they're built to milk you, break you, and then all of a sudden dangle that discounted retry entry fee for you to fall into that trap there. Yeah, 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 yeah. So today we're going to break down the prop firm Mirage, the troop you don't see under the hood or behind the curtain until your fourth retry and no payout. Mmm. Same beef. No, 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 no. This is forensics at its finest. Forensics dissection. Because some of y'all think you're actually getting funded when really you're just getting farmed. You're not trading their money, their money. No, you're not trading their moolah. You're trading your hopes and dreams inside their simulation, inside their matrix, inside their sandbox. Well, without further ado, I bring to you prop firm Mirage. So think about it. The illusion of prop firms is everywhere. You think the challenge is a test of skill and your might and your discipline, but it's really a filter. Yep, 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 yep. To find out how long it lasts before you slip back in to just try again. That one more retry. This ain't watching for your discipline. Okay? They're not looking at how well you manage risk and risk to rewards and your sharp ratio and your expectancy. No, they're watching the stats. They don't care about your setups. They care about your retry frequency. And that big win, what does it matter when it's in a simulation? When it's in a fake account with a fake feed and fake liquidity that expires faster than your 28 days patience, right? Faster than your ability to sit and wait for that 28 days before they hit you with another fee per month. Again, a lot of traders out there find that they do a good job trading as swing traders, taking the long-term approach on the higher time frames. But the challenge is trading my strategy where I'm a swing trader. If the rules say I can't hold positions overnight, this ends up being very detrimental. Even worse, if it's going to take a few weeks for my trade to play itself out, follow through to hit a target, I'm already being hit with another debt service fee. So you're not trading their money, you're trading inside their simulation. So the fundamental deception within this industry is that the traders believe that they've been given access to real capital and real markets, but in reality, in totality, you are confined within their little box, within their matrix, within their simulated trading environment. Heck, a lot of you don't even realize it. Even if they claim to give you a live account, you're funding the initial risk buffer. And it operates under predetermined liquidation rules just designed to ensure your eventual failure. The model depends on you believing that you've got market access and a genuine chance when really you're isolated in a trading environment with no hope to even get out of that box. So, what's the real structure behind the challenge? What's behind the curtain? What's under the hood? Let's pry under. So, what you think is happening is you trade, you do good in trading, take your setups without hesitation, reservation, or fail. But how is it that you still continue to fail? You think it's trade, pass, and then get funded and then hopefully withdraw profits. But here's what's actually happening under the hood. You're trading a synthetic price feed, you're getting data mined and funded inside an internal risk desk. So the exposure is capped and you're the product. The profit comes from your monthly fees and reset fees. Profits getting throttled, delayed, or even denied. Some of them deny payouts until their trust pilot goes down and their BBB ratings end up in the stinker and they change the name. This isn't funding its performance theater with payout conditions in 6 font size, meaning you can't see the fine print. So you don't understand their true intent, which is never to actually help you gain any true capital or actually find your end destination and goal of being a funded trader. So, real market feeds versus the prop challenge feeds is going to be the critical difference. Am I getting access to level 2 data? Or am I trading a synthetic price chart with a synthetic asset where they can rig the game? You think you're trading gold in that Forex challenge account? You're not trading gold, you're trading a line of code. Ha ha ha! Ah! Ha! A lookalike wrapped in synthetic price quote feeds and padded with latency. There's no CME, there's no clearing. Are you hearing me loud and clear? No real field logs, no trade receipts, just trading fees. And I don't mean per trade, I mean per month. So you end up being the one with an empty pocket just by continuing to reset or retry month after month. And don't get me wrong. I mean, if you're a new trader and you're learning, it's fine. I understand, right? But the challenge is when you're in an MT4 environment, you're not in the market. It's like swimming uphill without a paddle and weights on. Why not give yourself a real chance to be successful? Products that are traded through a futures commission merchant, traded through a clearinghouse, and one centralized exchange, CME, NYSE, DTC. It's all good to me. Direct market access, very transparent execution instead of decentralized spot prices, right? You want settlement through independent clearing firms and regulatory oversight, not that shady offshore broker out of Saint-Tropez or Chile's or some other jurisdiction that you really can't get any recourse. So this is going to be very important. And why don't they disclose the trap? Well, if they disclose the trap to you, then you wouldn't move forward. You wouldn't pay the fee to enter the challenge in the first place. But truly, There's no NBBO compliance, no national best bid offer, folks. Just a feel that ain't real. And believe me, the feel is delayed. Yes, it's a game, it's a mirage. It is garbage mirage. Hidden latency leaves you slipping. Now, what about the conflict of incentives? Conflicted incentives. That means that their business model thrives on you failing. That's the same as the broker with the counterparty risk that you invite and is inherent when you're trading with a B book broker who is putting you in their liquidity pool. Okay? Again, there are prop firms that are legit, such as T3 Trading and Top Step, and we'll go over Jane Street. I mean, we won't go over the list right now. We'll save that for some other episodes. But for the most part, there is a real industry out there, but then there's also issues and traps that you have to learn to avoid. So the bottom line, these shady prop firms, they don't want you to win consistently. They want you to retry consistently, and the business model thrives on high failure rates and repeated challenge purchases. Yes, so you are the liquidity. So they're really just risk desks, not angel investors for traders, risk desks. A real fund takes risk with you, not on you. A prop firm, they monetize your risk. You lose, they keep the fee. And when you win, they cap your profits, or they delay payouts, or even disqualify you for something that was in this small print that you didn't read. Again, capping you isn't even the half. I mean, a lot of times, and I see out there's the instant funding challenges, right? Or instant funding plans where you can go lightning fast to funding, but you can't trade more than 5 or 10 contracts, and let's say the max risk is $1,500, right? You literally have a buffer of 1,500, but you had to pay $1,200 for the instant funded account and a monthly fee of $250 to $500. You think about that for a second. After paying the $1,250 for the funded account, $250 for the monthly fee, and a time restriction, meaning you got to take a certain amount of trades over a certain amount of days, and the feed is delayed. Guess who got played and filleted? Yeah, because you are the feed. You are the food. Remember, you're either liquid or the liquidity, right? They're preying on retirees, preying on novice traders who are looking at this as a viable route to funding, not realizing it's not backed. Or they're not backing you. It's more like a slot machine in disguise. If they collect the check, right, then it's all good. So you break your neck in order for them to collect the check because you're trading in a garbage mirage. Remember the Lambo that doesn't leave the garage? What's the point of having the Lambo if it's not going to leave the garage? And if you leave the garage and the road is a mirage and there's something blocking your view, then it's very hard for you to navigate towards the profit. So if they collect on your L's and throttle your wins, you're not a trader, you're a statistic. In this series, we're trying to help you get out the hamster wheel, avoid being a statistic in their revenue loop, and to be able to give yourself a real chance where you're stacking the odds in your favor. Again, for those that have never heard this before, continue to like, subscribe, make sure you follow because the information we're given is very rare.
Make sure to share.
Share as well, yeah. Make sure you share it too because we want to help the industry. The industry is gaining a bad name from these MLM fake finance influencers, from the shady prop shops, and also the shady brokers. The industry has gotten a bit tarnished. And this is the market I love, so we definitely want to make sure that we help you become more aware and an alert trader. And that's what you gain from this market forensic series. So if you think about it, MT4 yanked a lot of the licenses from a lot of these brokers because they realized the shady practices that they were implementing. But when you think about the prop firm is really the same setup as the broker, the Forex broker, who knows most people are funding with a few $100s or $500, blow up the account and then refund it again. Typically, if you think about the average Forex account and the 90-90-90 rule, where 90% of traders lose 90% of their account in 90 days, the goal is to keep you cycling in and siphon the account. That means the custodianship of the account goes from in your name to their name. They know that most of the time you're never going to probably withdraw. So when the model shifts to the prop firms, it's a lot easier to tell you it's a demo account. Now you're paying for the demo. And the same thing, you're rarely ever taking a payout. So in this case, instead of actually withdrawing funds from your real account, right? We're trading live. Even if it was a broker simulation, you're still trading live in the simulation. Now you're trading a simulation in a simulation. This is a double step backwards, if you ask me. So the casino model, the house has the edge through real structure. Losses are kept as revenue. Wins are limited and controlled with all these rules and red tape. So the players, they're incentivized to keep trying and trying and trying. A true angel investor wants you to succeed because they profit as you profit. There are funds of funds. There are real prop shops, but not these bucket shops that have transitioned to these retail prop shops. A fund of fund is a institutional prop shop, an institutional risk desk. A retail prop shop is merely just a casino. I need a sip of my coffee on that one. A garbage mirage. And they massage your ego along the way. But guess what? On this hamster wheel, you really rarely ever touch real capital. And those charlatans, yeah, I'm talking to you, Charlene. Yeah. With the little certificate saying they made the payout, they're no different than the introducing broker peddling the shady offshore broker. So what ends up happening is your access ends up denied. They don't settle trades. They don't move assets. They don't control custody. They don't control margin. Yes, these retail traders, they don't understand. They don't control margin. They don't control custody. So it looks like capital. It looks like access, but it's a simulated layer that have financial consequences that end up hitting you. Let me hit you with this cold truth here. Okay? I want to be real. Okay? I want you to look dead into my hoodie into the darkness and take the red pill. But once you take the red pill and go down the rabbit hole, there is no turning back. You don't own the position. You don't hold the capital. You're not even executing in a clearing firm. That funded account is just the simulation profile. No clearing, no settlement, no depth of market visibility, no execution receipts, no broker transfer, no ownership. Just you being the one on the ship that's sinking. So why most traders get cut within the 30 days? Well, the statistics, they tell you the truth, right? Want to know the driest stat they never post? That 91% of funded traders get cut loose in the first 30 days. And no. It's not because they're trash. It's not because they're garbage. It's because the system is designed for them to fail. The system is designed to expire them. It's a challenge loop, a hamster wheel, and the payout is bait. The real product is the retry. Yeah, so they win even when you lose. And when you win, they just delay the payout until you mess up again. Imagine you request a payout and they delay it about a week. Say it's internal, right? And then all of a sudden you end up going below a certain threshold where the profit ends up dipping. Now they don't have to pay you. 90% never withdraw real payouts. So the business model is a rebuy loop. Mm, 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 mm. So as we wrap it up, how do we look for a legitimate prop firm? Because there are legitimate prop firms out there. Okay? There's a checklist that you will go through, all right, that will help you to be able to vet these prop shops. Okay? So what to look for in a real prop model? How do you know if it's the real deal? Will you actually get the real feel? Well, let me hit you with a forensics checklist here real quick there. They need to have independent clearing, should have trading receipts, transferable positions, real exchange access, depth of market visibility, and no funny business on the payout side. They can't tell you where the trades are settled. You're not a trader, you're a product. You're a performer in a monetized simulation. Yeah. I know. It's hard truth, it's cold truth, but somebody's got to give it to you. So don't take the challenge blind. I want you to audit the prop firm first. Okay? Now that you can see it, you know what to spot. Here's the move. We don't take the challenge until we've done the audit. So once you audit the structure, you stop asking, can I pass? And start asking, is this even real? Okay? Is this the real deal? Now, I want you to go in, download the prop firm audit checklist. You'll find it at the link at the bottom. Also, join the real ones. Join the community where we're actually going in and dissecting the market. Okay? Also, I want you to share this with someone that you feel that's trapped in retry hell. That's trapped in that simulation in the market's matrix. And remember, real capital doesn't put you on a challenge. It puts you in the market with real feels that are real deal, real stakes, real risk on both sides. Are you a prop trader or are you funding traders? Now remember, like and subscribe for more. It's the end of episode 3. Stay tuned for episode 2 coming out tomorrow. It's Mr. Wall Street, the bid god, Don Wick out in this bitch.